Mortgage rates are still well below 7% and things are looking good for home buyers in 2024. However, we are back below 500,000 available homes on the market in the entire country, a country of over 330 million people. So supply remains the issue so far. Both Dallas County and Collin County ended the year with prices higher than they began, though Dallas County saw way more appreciation than Collin County, as we're going to see here in a minute. As you saw in my yearly forecast last week, I believe that mortgage rates are going to start to stabilize, meaning less dramatic swings, and I think the most likely scenario is they stay in a range between about 5.75% up to 7.25%. If you're hoping to buy a house in 2024, your best bet is going to be between now and the end of February before the spring market demand comes in. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I do a weekly update covering all of Dallas and Collin counties. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, is my favorite part. It is the top 10 ranked charts of the hottest and coolest cities and zip codes. If this sounds like something you're into, make sure to subscribe. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description. Okay, today is January 8th, my first market update for this year. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. First up is market news. If you'll remember, much of 2023 was filled with talks of a recession and a housing crash. But if you were following along with me here all last year, then you didn't fall for this. So let's look at what actually happened. In Dallas County, the average home sold is up 15.8% year over year. That's from last December to this December. Meanwhile, Collin County is only up a modest 3.6%, which is still a significant gain for the year. You have to understand that this is appreciation that happened in a year where mortgage rates got as high as 8% and could swing 0.5% just over the weekend. So this happened while demand is at all-time lows. Guys, this is actual data. There are too many buyers for too few homes. You can see it right here, 15.8%. We're up to $518,225 was the average sales price in December. While last December, prices were down around $448,000 for the average sold price. If prices went up 15.8% in a year when mortgage rates got as high as 8%, what do you think is going to happen when rates get back below 6%? Prices are going to continue up. If you still believe there's a housing crash coming, what data are you looking at? Inflation is dropping, and in fact, the biggest component of the inflation number is the shelter component, which is housing. The shelter component makes up 44.4% of these inflation numbers. So in order for inflation to spike back up, that would mean housing would have to spike back up. And just to show you, this is the year over year shelter component change in CPI. And as you can see, this is a chart in a downtrend. So for inflation to go up, the housing component would have to reverse up. And I know this might confuse some of you as you see housing prices are going up. The shelter component is not based at all on housing prices. It's only based on rents. So housing prices can continue to go up through the roof, and as long as rent prices don't go up, then housing inflation will look like it's going down. Everyone knows rate cuts are coming this year, and if you're waiting to buy a house, just know it's very likely you're going to pay more for the house than you would today if you decide to wait. Okay, moving on, let's start with national housing inventory. This week we had a decrease of 14,097 homes for sale in the country. Again, this number could continue to drop well into the spring. In fact, last year, inventory declined all the way until April 14th. Now, before COVID, inventory would usually bottom out at the end of January, early February. Ever since COVID, it started out in March and it's gotten later and later. So if last year is an indicator, we could see less homes on the market every week until mid-April. But as of now, we're down to just 499,143 homes for sale in the entire country. Again, a country of over 330 million people. Now let's take a look at the new listings data. So what we have here, this data is not reliable either at the end of the year, as you can see it goes crazy, or at the beginning of the year either, but we're gonna start tracking it anyway. So we're starting out this year higher than we did the two previous years. Not by much, we're at 35,698. This is new listings that came onto the market this week. So this is good news. Just to tell you what happened in 2022, we still had a lot of people listing. Then as rates started to go up, people were getting locked into their houses because of their good rates. All the middle of last year, we saw nowhere near as many new listings as we had seen the previous year, and neither of these are even close to a normal year. But the point is, by the end of last year, we caught up to the 2022 numbers, and our hope is that we're going to start out above this year, which we have, and continue to build more and more new listings every week. Again, my theory is that if mortgage rates will begin to stabilize, meaning they don't even need to drop, though I do think they'll drop, as long as they don't have these dramatic swings, then I think we're going to see more and more people confidently listing their homes, knowing that they actually know what their next home is going to cost. The big issue was, even if you were willing to buy at a 7% rate, you could list your home, and then by the time it gets a contract, rates could have gone up 0.5%, and now you can't afford your next home. So that uncertainty kept a lot of sellers sidelined as well. Not just that rates were high, but also because it was just very uncertain, very difficult to make an educated decision. So that's my prediction. Rates are going to stabilize, go down a little bit, and that's going to bring new inventory, new sellers that are confident, and hopefully we see that reflected in this new listings data as time goes on. The last thing we're going to cover on a national level is the number of homes having price drops every week. Looking at the national chart, this week we're down to 32.8%, down from 36.5% this time last year. And this chart was the biggest leading indicator to me that no one was talking about that home prices were not going to drop. If we were going to have a price crash, you'd see it starting by an increase in the number of homes cutting their price every week, not a decrease. So that pattern is continuing. There are less homes having price decreases now than there were this time a year ago. And we'll look at all these numbers at our local markets here in a minute. Okay, moving on to mortgage rates. As you can see, we started the year, first recording was January 2nd at a 6.72. Got down to 6.7 and ended at a 6.75. So this is what we want to see, a nice, slow, very uneventful week. This is the stability the market needs in order to give sellers that confidence to list their home. Now, very quickly, let's look at the 10-year chart. We look at the 10-year because mortgage rates most closely follow the 10-year. So these two lines, this being the top, this being the bottom, those are my predictions for where mortgage rates will go this year. I did leave a little room outside for deviations. I think this will get between 3.25 and about 4.25, which that's what translates to about 5.75 rates or 7.25 rates. But as you can see, starting the year, we held the top line already. And this green line is not meant to be a prediction of like when I think it will get this low. It's just telling you I think these two boundaries will hold for the year on the 10-year, which then translates to mortgage rates. And I normally track mortgage purchase applications, but the data is not reliable, again, either at the end of the year or at the beginning of the year. So we'll start tracking those again next week. Just know that the last data we saw was in December as rates were dropping. We were seeing an increase in the number of people applying for mortgages. So we'll pick back up on that next week. Okay, before we get to the local data, two things. The first is I'm now doing a weekly home buyer seminar, and this is for anyone who is even thinking of buying a home in the DFW area within the next year. If that's you, click the link in the description to sign up. And number two, I've developed a max affordability calculator that many of you have already used. It's a great tool that will help you very quickly and easily discover a solid ballpark range of how much home you could actually afford today and your personal financial situation. And it takes into account everything all the way down to your tax bracket. This is completely free to use, so please take advantage of it. If you're interested in that, you can watch this walkthrough video next, or there's a link in the description as well. Now let's move on to the local markets. We're starting with the MLS data. And again, at the beginning of the year, the data is always very skewed, but I'm just going to start tracking it this week. In Dallas County, we had 149 closed sales, 190 homes went under contract, 366 new listings. Of the homes that closed, 23 of them were immediate sales, meaning they went under contract within the first week. And in total, there are 1,618 homes either under contract or in pending status in Dallas County. Looking at Collin County last week, we had 107 closed sales, 151 went under contract, 245 new listings. Of the homes closed, 24 were immediate sales. And in total, there are 1,321 homes either under contract or in pending status. Now let's move on to the local markets. We're starting with Dallas County. If you've ever seen my videos, what I use is called the Market Action Index. It just takes into account all of this data over here on the right, puts it into one nice, easy to read graphic with a number. Any number, a 30 or below, is a buyer's market. Anything above a 30, we're just asking how much of a seller's market are we in. The number currently is a 42. What you need to know is that number is increasing over last month. You can see that reflected here on this curve. It's starting to increase, but still in Dallas County, what we have is just a slight seller's advantage. So looking at median list price, it looks like it's possibly just about bottomed out. It wouldn't be unusual if this number continued to drop until the spring market comes in, and it's too soon to call a bottom. Again, for a trend, we want to have several weeks, and we really would be looking at the 90-day curve, so that's not going to be curving up yet, but just know, no real change from last week. Median days on market remains the same as last week at a 56. The obvious one we talked about, the number of homes having price decreases, is dropping significantly. Inventory obviously having a sharp drop, and I want to show you, just looking at the 7-day average, this week we had 36.43% of homes having a price drop in Dallas County, whereas this week last year we were up to 41.43. Again, This is a big drop. Way less homes are having price decreases now. This is not what happens when you're going to have a price crash. I also wanted to take a quick look at inventory because the good news is we are above where we were last year, and this is what we want to see. Last year we only had 2298, and this year we have 2871. So it may not look like much. There's obviously not a lot of homes on the market if you're looking, but this is what we want to see, more than last year. Now let's look at the same data for Collin County. Collin County actually does look like their prices bottomed out and are starting to curve up over the last few weeks. Their number of homes having price decreases dropping as well. Median days on market, same as Dallas at 56. Inventory dropping significantly, just like we expected. Market action index definitely heating up. If you'll notice, they are in a strong seller's market because they're already up to 45. Looking at the number of homes having price decreases, they're at 34.85, down from 47.12. So big drop in the number of homes having price decreases. And looking at their inventory, this time last year, 1,494. Today, 1,868. I also want to point out, even though it is an increase in what we need to see and hope for, only having 400 more homes for sale this year, that's not great. Now we're moving on to my favorite part. These are the top 10 ranked charts of the hottest and coolest both cities and zip codes in all of Dallas and Collin counties. And this is using that same market action index number we just discussed. Remember, a 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in. So we're starting off the year with a new leader. Whereas Carrollton was the leader for much of last year, Coppell takes over the #1 spot. That heated up from number 2 up to number 1, followed by Carrollton, which cools off 1. Louisville remains number 3. Plano heats up 2. Saxe heats up 4. Duncanville cools off 2. Prosper cools off 2. Princeton jumps onto the list out of nowhere, I think for the first time ever since I've been tracking it, number 8. Richardson cools off 1, and Irving cools off 3. So Garland got knocked off from the number 10 spot, entirely off the hottest cities list. Now we like to zoom in and look at specific zip codes. Remember, a 30 or below is a buyer's market, so being at a 61 is an incredibly hot zip code. If you live here or if you're looking to buy here, this is still a very hot market. So the absolute hottest zip code is Carrollton 75010, followed by Louisville 75077, Duncanville 75116, Carrollton 75006, Coppell 75019, Plano 75075, Irving 75063, Frisco 75035, Irving 75038, and Garland 75042. So these are the absolute hottest cities and zip codes in all of Dallas and Collin County. Now we're moving on. We're going to do the exact same thing, but the coolest cities and zip codes. Not a lot of movement on the coolest cities list. Ferris, Van Alstyne, Leonard, Whitewright, and Seagoville all remained in their spots from last week. Though this is the first time ever we have officially had 3 buyer's markets in the Dallas area. Remember, 30 or below is a buyer's market, so all 3 of the coolest cities for the first time ever are officially buyer's markets. Then after Seagoville, we have Rockwall cooled off 2 spots. Nevada held its spot. Farmersville heats up 2. Balch Springs jumps on at number 9. Red Oak jumps on at number 10. So Salina and Sunnyvale both heated up completely off the coolest cities list. Now let's zoom into zip codes. The absolute coolest being Ferris 75125, Van Alstyne 75495, Leonard 75452, Dallas 75204, Whitewright 75491, Grand Prairie 75050, Rockwall 75032, Dallas 75212, Seagoville 75159, and Dallas 75203. So that's it, our first market update for the year. Hopefully you'll track with me through the rest of the year. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.